In today's transaction breakdown video, we'll be dealing with trade receivables, a transaction commonly used when dealing with the statement of comprehensive profit and loss and the statement of financial position. The information given to us stipulates that trade receivables of 56,700. This is the amount from the trial balance. And it says note credit losses of 4,500. So that means under our nominal account section, we have credit losses of 4,500 on the trial balance. Further information states that 6,700 has to be written off. We need to create a provision for credit losses at 4% of debtors and create a provision for discounts at 2% of debtors. What we know is that we are due 56,700 from our debtors. We know that our credit losses amount to 4,500 before anything is written off. And we know that 6,700 of our debtors must be written off. We must also create a provision for debtors and also a provision for discounts at 2%. Now, our first step will be to write off the credit loss. Write off simply means removing debtors from our debtors control, basically subtracting the write-off amount from our trade receivables, as we no longer expect that amount and consider them as credit losses. Another word for that is bad debts. So therefore, 56,700 subtract 6,700 will leave us with 50,000. 50,000 will be our new trade receivables amount. From there, you need to add the written off amount to your credit losses. Now remember, the information told you that 4,500 was the amount from the trial balance for credit losses. Therefore, we will add the 6,700 which we need to write off and consider as credit losses to the 4,500 which was originally there. This will equal to 11,200 Rand. Now this is how it would look on your income statement or statement of profit and loss. Credit losses, open bracket 4,500 plus the 6,700 and close the bracket, and on the total column you will write 11,200. Now remember, credit losses will go under your operating expenses. Now the next step you'll have to take is to calculate provision for bad debts. Now you need to use the new balance for trade receivables, that is the 50,000 in which we calculated. So therefore 50,000 multiplied by 4% will give us 2,000 rands. This is our provision amount for bad debts. This amount will go under operating expenses as provision for bad debts, or another word, credit losses. So therefore, bad debts provision, open brackets 50,000 multiplied by 4, and that will give you 2,000 on the total column. Now remember to write the calculation in brackets, as if your amount is wrong on the total column, at least you might bag some marks on your calculation. Now the next step will be to calculate provision for discounts granted. So therefore we first need to subtract the provision for bad debts from the trade receivables amount. So therefore the 50,000 that we had calculated in the beginning, subtract the 2,000 of the provision for bad debts, which will give us 48,000. Therefore 48,000 multiplied by 2% will equal to 960, which is the provision for discounts granted. This amount will be added under the operating expenses as provision for discounts granted. Now remember to write the calculation in brackets as stipulated. 48,000 multiplied by 2%. And on the total column you'll have your 960. Now remember, this will go under your operating expenses. So as you're adding all those operating expenses, do not forget to put the total for operating expenses in brackets. And just like that, you will have concluded your trade receivables transaction. Now, if there's something you need clarity on or do not understand, make sure to leave a comment or contact us on our WhatsApp. Make sure to join our free WhatsApp group where more transaction breakdown videos will be shared and Q&As.